Hello folks, this is Jamie Upson from Stonehearth Capital Management with an educational economic update for March 2017. In this month's video, we'll discuss some of the major headlines that influenced markets in February and provide insight into what these developments could mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. February 2017 was a month filled with record highs in the domestic markets. The S&P 500 and the NASDAQ both hit a number of new highs last month, while the Dow went on a record-busting streak. In fact, after reaching 20,000 for the first time ever in January, the Dow hit record highs every trading day between February 9th and 27th. The last time we experienced a string of records like that was in 1987. And this is only the second time it's happened in the past 120 years. Seeing stocks rise like this can be exciting, but I want to caution you not to get caught up in the euphoria. Just as emotion has no place in investing when the markets are volatile and challenging, the same rule applies when markets are growing. So let's dive deeper and review some of the fundamental data we learned in February to better understand where the economy stands. On the labor front, last month gave us some somewhat mixed data. We received the January jobs report, which showed that the economy added far more jobs than experts predicted and continued its 76th straight month of growth. But on the other hand, hourly earnings and labor force participation each increased by only a small margin, while the unemployment was also up slightly as more people entered the workforce again. Ultimately, the job data released in February indicates that the labor market is growing, but the pace is still not what many people would prefer to see. Another area where we saw modest growth was in the revised GDP numbers for the fourth quarter of 2016. Each quarter, the Bureau of Economic Analysis calculates the U.S. gross domestic product, which is the total dollar value of everything that people and businesses produced during that period. This measurement is a critical indicator of our economy's health, so investors and financial analysts watch its changes very closely. And because the Bureau receives updated data after a quarter's end, they release 3 GDP numbers over the course of 3 months: advance, preliminary, and final. In February, we received the second or preliminary reading of GDP for the fourth quarter 2016. Consensus was that the reading would increase to 2.1% from 1.9% growth in January's advance report. But in reality, the reading didn't change and stayed at 1.9%. For comparison, the third quarter GDP came in at 3.5% growth. Rather than indicating that the economy is slowing down, however, just one aspect of GDP contributed the most to the decreased growth: lower net exports at the end of 2016. Trade is integral to our economy, so maintaining a healthy trade balance is key. For now, no one can say what new policies may be on the horizon or if the markets will continue to reach even greater heights. So we will continue to analyze the data and search for the most thorough view of our economic standing. This perspective is the foundation of our support, and we are here to help you find a clear perspective amid the hype. Once again, this is Jamie Upson with Stonehearth Capital Management signing off for the month of March 2017. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 978-624-3000. We'd be happy to talk to you. Thank you.